Do you want silver to pump to triple digits and beyond? Apparently there are 3 key signs to watch out for. We'll take a look at that article today. Of course, we'll do the usual gold, silver, platinum analysis and all the other fun stuff. Now, if you're watching this on the replay, of course, use the time codes below to go to your favorite part. But if you're watching live, you get to enjoy every single thing we do here at Good Morning Stackers with me, Joe Main, your week daily live morning show all about precious metals. But in the first 1 minute of the show, you love it and you wait for it and you can't wait until it happens. We do the synchronized slurp. You grab a tasty beverage, I grab my tasty beverage. We slurp them synchronously together. It is the honor system. You must do it audibly wherever you are in the world. And we have lots of world watchers. Here we go. Ready? In 3, 2, don't be embarrassed. Just do it. 1, go. Oh, that is great. Hit the like button to help the algorithm. Of course, hit the big red subscribe button to join the family. I am Joe Main, worked in the precious metals industry here in Australia. Goldstackers, Bullion Now, Ainslie Bullion. I've been a stacker for 14, 15 years. Now I do this daily live show and I help you launch and grow on social media. You've seen me do it many times before for other businesses. I can do it for your business too. Hit me up with an email at gmail.gmail.gmail.com. Hope everyone's having a great day. Of course, what we do first is the shout outs, then we'll get straight into our topic of the day, then we'll do all the other stuff. So, great to see so many people already watching. Of course, Mark Florida, GMS Joe, are you and Jesse Colombo twins, sons of different mothers? That's so funny you should mention that. I checked out, because after we did the article yesterday from Jesse, of which heads up, it's another one today. I checked out the Substack and I saw the photo and I'm like, we're not, obviously. Not that I'm aware of, but it's funny, isn't it? Yeah. Hazza, GMS, Hazza, hey guys. Mark Florida, hello David. I love again that you talk amongst yourselves. Got a bit of a weird thing going on, a bit of a bedhead. I didn't have time. Whatever, man. Should have put the hat on. Okay, I'm not going to pronounce it. I'm going to say that's going to be an Southeast Asian one. I'm going to guess. Man, I really should put a hat on today. Oh well, what do you do, man? What do you do? Look at this faux hawk going on. Let's see. Tell me, Lance, what it is. I need to know the language, please. GMS. Good morning, Mark. Ben Ferrugia. Hey, legends. Good morning. What precious metals miners are we eyeing off and accumulating? Interesting. For those in AUS in Australia, who do you invest through? Interesting. Who do you invest through? We'll come back to that. Maybe someone can answer that for Ben. GMS says, CT from the Lone Star State in Texas. Morning, Joe. Morning, Jason. From the UK, Australia, I've forgotten. David Williams, no, Jason Ashworth is originally from South Africa, I think, and lives in Australia now. Yes, he does live in Australia, of course he does. Triple digits, question mark, yes please, it's coming. It is coming. Triple digit silver is coming down the track, but apparently we'll look at 3 key signs that would spell that's much more likely. Good morning, Wally Chang. Great to see you. Fantastic. Sipping coffee from the town of Stroud. Fantastic. Wally and I, you and me, Wally, we need to have a chat. Well, let's jump on a Zoom. Maybe today if we get a chance. Tell me what your movements are today or tomorrow. We need to have a bit of a chat. Triple digits is a given. I do agree. Inflation adjusted all-time high puts it there already. Absolutely. I mean, $50 in 1980. Inflation adjusted, it's already there. Just needs to catch up. Silver Fox, hi guys and gals. Good evening. Good night, Stackers. Chris King is from the UK. Vanessa, haven't seen you for a little bit. Great to see you on the channel again. And it's Filipina. It's Filipina. No, it's Filipino. You say Filipina. It's Filipina. I'm Filipino. I know, I think you say Filipino as far as I'm aware. My very first girlfriend was half Filipina. That is, so half Filipina she was. And so I got to know that culture a little bit. Lovely culture. The Philippines culture. It's very cool. Very nice people. Lance says, I use CMC markets, Ben Ferrugia. No brokerage for buys. Oh, under 1K. Nice. So I accumulate that. So no brokerage fees for under 1K buys. Oh, that's interesting. Oh, cool. Good to know. Pete repeat GMS. And all right, we're into it. Tony Peterson, Chat Mum is not here today, but that's okay. You guys will remain in line while Chat Mum is not here. I imagine you do, unless it's like when Mum's away, everyone will. It is. Yeah, you're right, Wally. It is Peanut. Yes, it is. When Mum's away, when the cat's away, the mice will play. So go ahead and play away. All right, people. Let's take a look at apparently 3 key signs that will spell silver to surge like gold recently has. Now, we did an article yesterday penned by Jesse Colombo, and that was actually penned a couple of days ago on Monday, but we talked about it yesterday. But just overnight, there's been a new article by Jesse Colombo, someone I'm just learning about. So great, and makes some really good points. So I wanted to highlight that as well, and also champion Jesse Colombo's Substack and channel and all that stuff as well. So let's see, let's take a look at it. Let's see if I agree about these 3 major signs, these 3 conditions that Jesse believes need to be met in order to see silver surge like gold. So let's take a look at that. We're going to go back to the zero hedge, good old zero hedge. Again, I haven't jumped on zero hedge for a long time until just recently. So let's read this article together. I find it very interesting. Okay, 3 conditions must be met before silver surges like gold. Authored by Jesse Colombo via Substack. Let's read it together, my funky people. Just 2 months ago, the precious metals community was growing frustrated with gold after its choppy, lukewarm summer price action. Yep, but you know, that's par for course. At that time, I, as in Jesse, kept urging investors to stay patient, as I believe that gold was about to break out in multiple non-US currencies, which would result in a powerful surge. Sure enough, that's exactly what unfolded. All right, so Jesse's doing I said this would happen, and this thing happened. So, you know, some social proof, and I believe even more gains are ahead. I do agree with that with gold. Now I'm noticing the same frustration with silver. I would agree with that, as it has remained stagnant for the past 5 months. In this article, my goal is to encourage investors to remain patient with silver, of course, as I believe it's on the verge of a strong breakout, much like gold, once these conditions are met. All right, the first condition is straightforward, yet largely overlooked by investors and has proven surprisingly challenging to achieve. The spot price of silver must close decisively above its $32.50 US resistance level. I would agree with that too. So $32.50 is the current recent resistance. I talk a lot about 31 US dollars. It's a very key Fibonacci level. And since it closed last month above 31, and I've been saying for months previous to that, close any month above 31 and it's 100% bull market territory, higher prices coming, rather than 99% where I already was when we cleared and held over 26 for a decent period of time. And much more than we had previously. But 32 has been the recent high. So yes, that's a pretty obvious one. We've got to clear it. Okay, so there's a spike there. We actually spiked above just the other day to 33, but failure to close above 32.50. Yeah, I would agree with that. That's rough resistance. Cool. Backed by strong now it has to clear decisively above, backed by strong trading volume at the same time. Agree. The 32.50 resistance level was established at the May high, yes, which after silver pulled back and remained stagnant over summer. Silver recently attempted to break above that level. Yes, it hit 33, but both efforts fell short. Yes, it failed to close above it, leading to subsequent pullbacks. Yep. I believe the time is approaching, however, where silver will finally break through and close above that level, sparking a significant rally. I believe that's happening too. Again, because we closed October above 31 US dollars, that key Fibonacci. And when I do my silver analysis after this article, I will show you that Fibonacci if you haven't seen it yet. Once that happens, I expect silver to surge rapidly to approximately $50. Okay, That's possible. I'm probably going to remain with 37 to 40 US dollars, no higher than that in 2024. 50 would certainly be coming. Hey, I could be completely wrong on that. You never know. It could surge very rapidly to the $50 mark. The next condition, the second one, is that silver priced in euros must close decisively above the resistance level that formed at the May peak. So basically saying same thing as US dollars. You want to see it close above 32.50, but Jesse is saying you also need to see silver close above 30 euros. Okay, similar level right there. Cool. This event would help confirm, a close above 32.50 US. Yep, greatly reducing the chances of it being a false breakout. Yep, I find it valuable to analyze silver price in euros, as this approach removes the impact of the US dollar fluctuations, offering a clearer view of silver's intrinsic strength or weakness. Notably, silver priced in euros often respects round numbers, like 26, 27, and 28. I don't really follow silver against euro, so I haven't noticed that. So that's an interesting one to learn about. Frequently establishing key support and resistance levels at these points. Interesting. These levels are worth watching closely. Take a look for yourself. Let's do that. Okay, so, well, there's the 30 euro resistance. 29, that's kind of harder to see. 27, you can see the resistance level. Okay, yeah. Where's that 26? Well, there's that clear 27. I will take Jesse's word for it that it is a pattern. The final condition is more esoteric. Now, this is touching upon something that Jesse talked about in the last article, okay? But I believe it will significantly, now we have to pass this through, I believe it will significantly reduce the likelihood of an upcoming silver breakout being a false one. We could condense that sentence into, but I believe it will significantly reduce the likelihood of a false breakout. Okay, so it's an index I developed called the synthetic silver price. We talked about this yesterday. It must close above its key resistance zone between 25.60 and 26.40. And what this is, the synthetic silver thing, this is what Jesse's come up with. It's an average of the price of copper and gold together. It results in a synthetic silver price that tracks the actual price of silver very closely. Okay, so this is you wouldn't call it proprietary. It's not. He wouldn't have trademarked it, but it's something that seems like Jesse's come up with himself. Seems to find it very predictive, and that's a good thing. So we want to keep all ideas on the table. This index represents the average of gold and copper prices with copper's price adjusted multiplied by 540. I don't know why it's 540. There must be a reason. To prevent gold's higher price from disproportionately influencing the index. To learn more about this methodology, please watch a presentation I created. So you could go to Zero Hedge, find this article. It's just recent. It's just overnight. Find this article and then click on that link to the Learn More section to learn about that silver, the synthetic silver thing, and how he gets to that, why the multiple of 540, etc. The price of copper is an often overlooked factor in silver's performance and rivals the influence of gold. That was what we talked about in yesterday's show. The index closely mirrors the silver's price movements, yet surprisingly, silver's price itself isn't even an input. Right. So, as I said earlier in this piece, there is a high probability that silver will quickly run to $50 once these three conditions are met. Let's go through them again. That the three conditions are silver breaks and holds above $32.50 USD. Second condition, that it breaks and holds above 30 euros, and that the synthetic silver price index, which is again an average of the copper and gold prices, must close above its resistance zone of 25.60 to 26.40. So once those three things happen, posits Jesse that silver will quickly run to $50 US. I, as in he, is focusing on $50 as a relatively short-term target because a significant psychological level. Yes, the peaks reached both during 1980 and 2011. Yep, one of the reasons why I'm so bullish on silver is because its monthly chart reveals a breakout from a massive 2-decade-long triangle pattern. Yes, it does. This breakout signals that silver is on the verge of a powerful bull market. You've seen this from me. Now, I think he might be using linear chart, though, not logarithmic. This goes back to, 2011, the long-term triangle pattern. We've looked at the long-term triangle pattern as well. Let's go to there actually right now. I'll quickly have a look at that. Let's mirror that, shall we? That's the same thing. Now, this is the long-term triangle pattern. However, I think Jesse is looking at it on the linear time frame, not the logarithmic. So let's go not logarithmic. Okay, so this is the linear chart pattern. Yeah, there you go. That's it right there. That's on the monthly time frame. And we'll go back. Yeah, you can see that. Okay. Exactly in the same point too. I think that looks exactly, almost exactly, right? But I use the logarithmic scale because I find it more predictive on the longer term, okay? So let me pop in the logarithmic and then you'll see how these lines match up. So I do agree, we've had this drawn in for a very long time. This trend line, this triangle pattern right here, and it recently broke out. Been talking about it for a while. Broke out of the key Fibonacci level of $26 roughly, and it finally broke above this area and held above 26 right here for more than like a month or two. It did it for multiple months. And after about the third month, I'm like, okay, that's 99% sure we're in a bull market now. And then, of course, we closed above 31 last month, and I'm like, 100% in a bull market. So I do agree with all of that. The triangle pattern is really easy to see. Okay, it's pretty obvious. So do agree with the long-term triangle pattern, although he is looking at this on the linear, and that's okay. Let's see. One of the reasons of a powerful bull market. Okay, there you go. I should have read all of this first. If that isn't exciting enough, there you go. Silver's logarithmic chart, there you go, dating back to the 1960s, reveals a cup and handle pattern. Yes, it does. We've all seen it. That suggests that silver could reach several hundreds of dollars per ounce during this bull market. Also agree. We've been talking about for a long time the very large cup and handle, and we are already on the logarithmic chart. Let me get rid of all this for you, all the noise, and you can see that giant cup, giant handle, and in my video entitled Silver to $95 or $670, that was the title of the video, which had a great number of views compared to the rest of my channel. We were talking about logarithmic versus linear. There was someone, not Jesse, who came up with a recent article saying, hey, if this is a cup and handle pattern, which it is, and if the cup and handle pattern plays out, and this person was using a linear scale, they were saying, oh, look, it could pump to 95 US dollars, okay? Because it's like a measured move between here and here, then you do the measured move, and that gets to around about 95. The distance between here and here equals about the distance between here and here, about 95 US dollars. And this was, I think this was also a Zero Hedge article. And I said, okay, yep, but you really got to look at the logarithmic, because when you do it for the logarithmic and then you match, right? Logarithmic measures percentage gains, not just linear values. Okay, so for example, and I've done this before, but I'll quickly show you. Several hundreds, I absolutely agree. If the cup and handle plays out, where is my price thing? There we go. Right here, watch this. There, so that is a 1200% move. And then if it's a cup and handle that plays out, you'll find that you take it from here, and we're talking 640. I think it equaled about 640 or 670 US dollars. So if the logarithmic cup and handle plays out, which is much more likely in my opinion, we're not just going to pump to 95 US dollars, okay? Over the longer term, you can, not saying it's definitely going here, all the way to 640 US dollars, but that would be the full playing out of the cup and handle on this very long-term silver chart on the logarithmic scale, okay? Anywhere up to about 640, 670 US dollars, right? But several hundred, don't forget, several doesn't mean 700. Several can mean, 300 plus. So that's dead easy. Dead easy if this is a cup and handle on the logarithmic scale that plays out. Absolutely 300 US dollars, no sweat in, 10 years time, 15, call it. Could be sooner than that. So I do agree on all of that. Yep. However, a close above the $50 resistance level right there is necessary to confirm this scenario. Could not agree more. Gee, we agree on a lot of things, and we even apparently look like each other a bit. I think it's just because we just both have brunette hair. Although silver has already surged nearly 50% this year, there are plenty of reasons to believe it's just getting started. One reason is that the long-term gold to silver ratio, I love this guy, chart shows silver is currently significantly undervalued. Let me read that again. Gold to silver ratio chart shows silver is significantly undervalued compared to gold. If the ratio were to revert to its historical average, of 52.8 since 1915, even without any increase in gold's price, silver would be valued at $50.36 US per ounce. Funny that Jesse mentions 52.8 in the gold to silver ratio. We'll probably go over these very quickly later on, but what have I been talking about? That's silver's final trapdoor at 70 US dollars. This is a gold to silver ratio, right? And I've had drawn in here for a while the 50 mark. Okay, that's where I would be seriously considering swapping a bunch of my silver for gold, if not all. Probably not all, because you want to keep a little bit up the sleeve, but that's a very, very key level for me personally. Looks like it is for Jesse as well. Great to see we are in agreement. Speaking of adjusting for silver's price inflation, adjusting silver's price for inflation further highlights how undervalued it is by historical standards. Absolutely. During the Hunt Brothers induced spike, was it the Hunt Brothers induced spike? In 1980, silver reached an inflation adjusted price of $143 US dollars. In the 2011 bull market driven by quantitative easing, it hit 68 inflation-adjusted dollars, currently trading at just $31.60. Silver has significant room to rise, even to catch up with these previous inflation-adjusted peaks. Absolutely, could not agree more. Another way to assess whether silver is undervalued or overvalued is by comparing it to various money supply measures. The chart below shows the ratio of silver's price to USM to money supply, providing insight into whether silver is keeping pace, outpacing, or lagging behind money supply growth. Check it out, people. Loving Jesse's work. Sharp spikes in the ratio mean that silver is at a risk of correction. Down. Attempted corner by Hunt Brothers in 1980. This is the 2011 spike, so it's nowhere near there. Nowhere near it, okay? So got a lot of room to move. If silver's price significantly outpaces money supply growth, the likelihood of a strong correction increases. Conversely, if silver lags behind money supply growth, it suggests a potential period of strength ahead. Blah, blah, blah. Won't get into that. To summarize, silver is on the launch pad, building up energy for a significant breakout. I do agree. While investor frustration is understandable after months of stagnation, the technical and fundamental indicators suggest that silver is building momentum for an impressive move. Also agree. Barring black swan events, barring stuff we can't see, market manipulation, all that. The combination of breaking key resistance levels, both in US dollars and euros, along with the confirmation from the synthetic silver price index, will signal that the rally has officially begun. So I agree, we're in a precious metals bull market right now. We're yet to get into a precious metals bull era. That will happen when the capital rotation from stocks into precious metals is confirmed, which it hasn't yet, but it's probably on the way. With historical trends and undervaluation further supporting this outlook, silver could be on the verge of a major run to $50 and beyond. Could not agree more. Great stuff by Jesse Colombo. So appreciate that. Go check out Jesse Colombo's Substack. Find him on other socials and subscribe. I would love to interview Jesse. So I might even reach out to Jesse if I get a chance, and maybe we'll have Jesse on the show. That'd be fantastic. Let's see. And thank you, Jesse, for getting me to look at silver price in euros, and I love this synthetic silver price thing. I will keep a track of that. So let's get your thoughts on this, people. What do you think? Let's see. Comments, queries. Here we go. Let's get to the comments about this article. CT says 647 US dollars per ounce of silver. Sounds good. Sounds good to me too. Let's see. Ben Ferrugia says, I only hold physical and would like to diversify into paper markets and accumulate shares in miners. Mining indexes. Very helpful, Lance, in terms of the CMC markets. Gold took 13 attempts to break $2,500, apparently. Yeah, and then once it broke it, yeah, that's good to see, although we'll take a look at the gold price, okay? Let's see. All right, people. That is really good. What I really want to know what you thought of that article. I'll get to those comments in just a second. Let me just adjust this because the sun is moving. Much better. Good to see everyone here. We have a bunch of people. We have a huge amount of people watching. Hit the big red subscribe button to join the GMS family right now. I am Joe Main. I've worked in the precious metals industry in Australia for 11 years and stacked for longer than that. If you just joined the channel, I do this daily, every single weekday, in case I'm flying somewhere because, you know, my 25-year career in entertainment. Speaking of that, if you are in Sydney this weekend, I know one watcher who's on the live chat right now is coming to see my show, the U2 show, Achtung Baby. You can find me playing in Sydney at that place, at the Wenty Leagues Club in Wentworthville. It's just right near Parramatta area, so West Sydney. So you've either got, you don't have East Sydney, you don't have eastern suburbs of Sydney because Sydney's right on the coast, right? So you've got West Sydney in Parramatta area, the Wenty Leagues Club, the U2 show Achtung Baby this Saturday night starting at 7:30. The show starts. Then if you're in Canberra, we're driving all the way down to Canberra for a matinee show on Sunday, which is a combined U2 and In Excess tribute show. That's called Stuck in a Moment. Just do a Google search for those terms or whatever, and you'll find the tickets, and then you come see me and we'll hang out after the show for a little bit. And let's do gold, silver, and platinum price analysis. But first, I will mention, because I actually didn't do it properly yesterday, my two brand partners, Perth Bullion Exchange, perthbullion.com.au, Australia's only dealer that gives you free shipping when you buy in bulk. No other bullion business has dared to do it in the past. I guess they didn't think it was feasible, or, you know, as I've said before, just like pre-Goldstackers, when I first joined Goldstackers back in 2013, pre that Goldstackers business being in a business, no one bought back at spot. No bullion business bought back at spot price. That was ridiculous. Like, who would do that? I guess they didn't think they didn't think it could be done from an economical standpoint. Goldstackers went, no, we're going to be the first to buy back at spot. And then Goldstackers got sold to a larger company, and Bullion Now, who I happened to be their first employee, started buying back at spot. So then Bullion Now were the only dealer to buy back at spot, which they still do. Now, Perth Bullion Exchange, since starting in May, they do buying back at spot as well. So they're the second company in Australia that buys back at spot. Okay, and it took 11 years for there to be more than one bullion business to buy back at spot. I'll say larger ones. If there's a mum and pup bullion business, okay, mum and pup one that does it too, fair enough, and I may be incorrect. But they're the two major ones that now do it. So two businesses only buy back at spot. Perth Bullion Exchange went, we're going to add that little extra thing for our customers. You get free shipping when buying in bulk. Add a number of items, add more than 20 items to your shopping cart. It could be 3 of this one, 4 of this, 2 of that, 1 of that. As long as you have a total of 20 items in your shopping cart, you get instant free shipping Well, free shipping. It's not always next day delivery. Okay, but it's free express shipping, sign on delivery, fully insured, tracking, and all that stuff. Okay. Otherwise, you can utilize their 3-month free storage program. You don't get free shipping if you utilize the 3 months free storage program because it's double handling, costs too much money. But yeah, so go check them out. If they're not if they're not in your rotation of bullion dealers that you buy from, you would be completely mad not to add them. So go to perthbullion.com.au and check out their range. It's a very cool range. Okay, and Ricky there at Perth Bullion Exchange is doing an amazing job with his YouTube channel, of which I am helping them, giving them the skills to create consistently engaging content. I did it for Bullion Now, I did it for the other ones, and now I'm helping them. I'm teaching them how to do it themselves, okay? And they're doing a great job. So check out their YouTube channel as well. Just go to YouTube, search Perth Bullion Exchange. You'll see all their stuff. Wealthstack, wealthstack.com, my second brand partner, an amazing phone app. Download it for iPhone or Android. This is great for you if you like unallocated gold programs. Bullion Now has an unallocated gold program. Perth Bullion Exchange has an unallocated gold program. Ainslie does. I think Goldstackers might still do. A bunch of companies do it. Perth Mint does it as well. Maybe try the other ones first. Did I just say that out loud? Yeah, maybe. But Wealthstack is really doing it a really right way. Number one, because it's a phone app. You can do it on the desktop here as well, wealthstack.com. Download the phone app. It's free to download, of course. And you're buying gold for spot plus 1%, no matter whether you buy $1 million worth or $10 worth. It's spot plus 1%, very cheap spread, and you can sell for spot minus half of 1%. So the spreads are very good. Also, what is coming? Silver is coming, platinum is coming, a debit card is coming where you can tap your phone, Visa, MasterCard, and spend in your precious metals. It's just amazing. So it's a newer company. They reached out to me to say, hey, we want to reach out to the stacking community first and get their trust. Okay, so download the app. I think I'll have to double check. It might still be in maintenance mode at the moment. I'm going to check in with one of the lovely people at Wealthstack to see and get an update on the app itself. It might still be in maintenance mode as far as I'm aware, but it's a really great program. And I'll be sharing more from Wealthstack. I'll be sharing my screen and showing you, how to buy gold, etc., through there and how to send to other people. I'll be doing tutorials on that as well. You can also go to the Wealthstack YouTube channel. I've got some tutorials on there. It's just a great program. It's 100% gold backed. Okay, backed by one of the largest gold vaulting storages in the world, LBMA registered. Okay, this is an Australian company, fully Australian regulated, all that stuff. And as you know, or many of my subscribers know, I did an interview with the CEO, David Ski, about a month ago, roughly. So go to my channel, type in David Ski. Just go to YouTube, regular YouTube, not into my channel. Just type in David Ski Wealthstack or David Ski CEO, and that'll probably come up as the first one because it's the first time he's done an interview for something like this. So, and he did a great job too. So he answers a lot of the frequently asked questions. Go check it out. Speaking of frequently asked questions, if you just go down to the bottom of any page of the website, bottom left-hand corner is the frequently asked questions link, and just read all that. Tells you all about it. Okay, so my funky people, that is my two brand partners. Any quickly final comments on? Yes, okay, so there was. Chris King said, follow Jesse for a while on X. He's good and insightful. I'm going to give Jesse a follow on X as well. I'm going to reach out to Jesse actually and say, hey, featured your article. Let's have a chat. So hopefully we get Jesse on the show. That would be fantastic, wouldn't it? Mark, Florida, thinking of bumping up my wife's retirement date to occur when silver hits 640 US dollars. Great idea. And like and subscribe, everyone. God, I do agree. Let's do the usual gold, silver, platinum price analysis. We'll get through it pretty quickly, I think, today, and then we'll get out of here. Probably no time for a chart request today. Maybe, let's see. If you do have one, pop one in though, and maybe if I get time, I will. Let's share the screen, and we'll go to gold first. Here is gold on the... Oh, it's the quarterly time frame. Okay, we'll go to the daily, okay, because this is a week daily live show. This is the daily time frame, and great to see. Here we are. I just mentioned it on the Gold and Silver Stackers Australia forum post. I do a little post there every single morning with a link to the live show before I do the live show. The fact that gold is back over the mother of all trend lines. Great to see. We just need to see it hold above it. That's it. I've been saying it for a while, and what you want to see is the following. No lower than there, please. Don't close any lower than there on the daily, and then onwards and upwards to make a new all-time high in gold, and then off we go. Probably to the races. If that happens, then I would say the correction isn't coming yet. Okay? That would be pretty obvious, right? And as I've been saying, we are in peaky territory now. And I'll reiterate this until the cows come home. We're peaky from here doesn't mean we peak here. Got it? And when I say peak, I just mean on the shorter term time frame, not on the macro year time frame. Okay, we've got way longer to go. In gold, we're talking multiple thousands of dollars, right? In gold, 10,000 plus, quite possibly in US dollar terms. Now, what's the price of a loaf of bread at that time? I don't know, and neither do you. But just in terms of fiat dollar currency, right? But if we see something like that and a bounce off, and then it's looking very good, and my personal no higher than before we see a decent retrace of maybe, 20 to 25, 30%, like that, which it will happen. It could happen from here, right? But it might not happen until we reach around this level here, somewhere between 2,875 and 3,000 US dollars. I'm going to show you why, and I haven't done this for a while. Why is that? Why 2875 and why 3,000? Well, 3,000 is just a psychological value, okay? And it's sort of decently above the mother of all trend lines as well for it to be a breakout and then have the retest, okay? So there's the mother of all trend lines, and that's like another 12% move. That would be a decent move. So breaking out of the mother of all trend lines and then coming back to retest, which is what I think we would do. You could go a little bit higher, but I think that psychological value of 3,000 would be a good area that people would go, ooh, 3,000. So why 2,875? Let me just double check if I can find it. Give me a second. You're going to see my ugly mug really up close. I just need to find my Fibonacci. That's not it. It's going to be a lower one. You want to see the hairs up my nose? Let me see. Rectangle. Do I not have my fib here? Horizontal fib retracement. That was the one. Not unlock. Duh. No, that was the one I just did. So I must have gotten rid of it for some reason. Oh no, 2875 to... No, that's that box. 1980s fib. There you go. That's why. This is the 1980s Fibonacci. This is the very old highs and the very old lows. And I'm taking them from... This is why it's 2,875, okay? Because I'm taking it from the level of 1980 to the lows of the early 1990s, right? And then, gee, what do you know? We had an exact hit on the 2.618 in 2011 at that almost exact, right? At 1,920 US dollars. It was just a little bit above that 1871 right there, because we're on the quarterly time frame, right? So that's just a tiny little bloop like that, but it's basically bang on the money, okay? I'm still keeping these, and I could be wrong on this, by the way, because I do look here and I go, oh, we haven't really respected it a whole bunch, but I am going to keep it for now, okay? And that's why I've got that 2,875 level, because that's the 4.236. Again, could I be wrong? Absolutely. But for me, 2,875 to that $3,000 level looks like the level if we're going to break out of the mother of all trend lines and have the breakout and then the retest, which would be super bullish for gold. That's where I'd see it at about 2,875 to 3,000 US dollars. Okay, that's the reason why 2,875. What else do you need to know? That's it. Stay above the mother of all trend lines, please. And do not go any lower than 2,470, please. That's it. Hold above there. Don't go lower than there. You go lower than 2,470, and then the best buy zone of 2,250 to 2,150 really comes into play. And hey, that might be good for you. That might be good for you because you want to load up more. That's all you need to know. That is gold, but great to see it above the mother of all trend lines right there. Cool, cool. Let's do silver. We looked at it just before, but we'll just do the intraday right now. $31.70 US cents. We're still above. Let's see. We just had that test of nearly 32.50. There's that 32.50 line that Jesse is talking about. Jesse Colombo. You can see it very clearly. There's that there, and that failure to hold it. Failure to, it spiked above, but failure. What do we talk about? We don't look at spikes. We look at closes. Okay. And there's a 31 level. We're above it. That's all you need to know. We're just in a trading range between there and that $32.50 level. Remain above 31, please. If you don't, that's the line in the sand at $29.80. You break $29.80, blub, 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 down to at least 25 US dollars. And that sets up the kind of there. So you really want that to hold, okay? That's why I need 29.80 to really remain as the new line in the sand. No lower than that, thank you very much. Which happens to coincide with this uptrend line too. Yeah, cool, got it. We start breaking back above and holding above 32.50 there, then we'll talk the higher prices. You know, your 35s, your 37 to 40s, as we've been talking about. And watch out for 38.50 as the key Fibonacci level. That's also, so you know, for my newer subscribers, that's also from the old highs of the 80s. Just like gold, it's from the old high of the 80s, the old high of the old lows of the 1990s, which silver Fibonacci, this Fibonacci on the logarithmic scale, has very much still remained within its pattern, okay? Because we have yet to, unlike gold, we've yet to break out of all-time highs from 1980. Okay, so that's why Fibonacci on silver, because we're still within the 1 and 0 range. We're not even above 1 here. We're not even above the previous all-time highs. Okay, that's why Fibonacci for silver is still really key. Okay, so that is why that is the 38.50 is the 0.786 level right there, and that coincides right there. See, 37 to 40, and there you go, right there. That's why it's a key Fibonacci for level for me. Watch out for that, possibly in 2024. Cool, cool. That is silver. Platinum. Whoa. Platinum. I'm still incautiously excited. I will remain where I was yesterday. We are not above yet the $1,005 level. We're not above there yet. Get above there, preferably above this trend line from February of 2001. So preferably above 1,010. Then I will say this is an invalidated head and shoulders pattern. We will not see that thing happen if it closes above there. Really good for platinum. I will be in I'll be in excited mode for platinum. Okay, we're not there yet. Lucy in the football does this to me every single time. A lot of the time, most of the time. Until she doesn't, kicks the football out from under me. So we just have to clear there. Okay, clear 1,005, clear 1,010. Interesting how it all comes up into one little confluence right there, isn't it? Right there. You clear that area, and onwards and upwards, my son. I would really say, would be very confident in that. Final hurdle 1,115. Close any month above there. I am full bull in platinum. Cautiously excited. Just watch out for the head and shoulders pattern. Otherwise, bloop, 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 bloop. That's all you need to know. That's my amazingly expressive platinum technical analysis. Great, isn't it? You get all the sound effects with me too. Gold to silver ratio. Yeah, gold to silver ratio. Oh, yesterday. Dang. Okay. Whee! This is on the daily time frame. Gee. What do you know? We spiked exactly down. And this is just take into account the fact that this is a ratio, okay? This is not a fiat dollar price. This is a ratio. And technical analysis still works on ratios, okay? Because clearly enough people follow it, and it must be tradable in some way, and not just, swapping from physical to physical. I presume there must be a gold to silver ratio trading option somewhere, okay? I don't mean options, but I mean a trading vehicle somewhere. There must be. And hey, I should probably get onto that because I'm not too bad with the gold to silver ratio stuff. Look at the uptrend line, right? Watch out for that's above my head. See right there, and bang right on it. So it's had another test of this uptrend line right here. We want this as a silver holder. You want this to be taken out. This is the time where you want to see number go down. Okay, if you're a silver holder, you want to swap your silver for more gold over time. You want to see this crack through here, and then eventually below here, below the bottom end here of 80.6, 80.5, below here confirms long-term silver dominance. Great to see a little test there. Now, it was a spike, okay? So it did go, gold went, not just yet. No, you don't, okay? But that's a good little test, all right? We just want to crack below here. You crack below here, then it looks like it's coming down to here. Crack there, full bull for silver versus gold, okay? And that's when we're talking about that ratio number of 70 and, of course, that 50 level that I and Jesse Colombo has been talking about as well. That's the gold to silver ratio. Ooh, okay. Just very quickly, I don't look at it every single week, but this is the Australian dollar to the US dollar. Why is this important to keep a track of? Because every single foreign currency floats against the world's reserve currency of the USD. So we've got that second factor to think about when we have assets denominated in Australian dollars. And when the assets are also mainly denominated in US dollars too, like gold spot, silver spot, and all that sort of stuff. So we came up to the top end of the very long-term triangle right here. It's not drawn in perfectly, but close enough for jazz. And it was a rejection, but we're just sort of in a no man's land area, okay? We are trending up on the relative strength index on the monthly time frame, but could say this is just a little blip along the way and that we might eventually break there. I don't know, and you don't know exactly. A lot of people are suggesting that we are going to see continued strength against the US dollar, which technically isn't as good for your precious metals holdings as the Australian dollar weakening against the US dollar. That's actually what you want to see if you're a precious metals holder or holding any asset in USD. But again, like I've said before, it's a double-edged sword, because if that's tanking, what's it doing to the rest of our economy at the same time? Okay, so it might sort of be an even Stevens thing in the end. But out of interest, it is back down for now, but not, we're in the neutral zone. Cool. That's gold, silver, platinum, and all the other stuff. Is it time to go? Let's do some more final comments. Jesse King says Jesse also has a Substack. Yes, I'm going to reach out. So, party people, if you have no more further comments, and if you've enjoyed looking at that article of the 3 conditions to be met before silver surges just like gold does, if you like the live gold, silver, platinum analysis and all the other fun stuff we do here, please hit the like button and hit the big red subscribe button to join the GMS family, because you get a warm and fuzzy feeling when you do, because you are and you have joined the winning team. 748 subscribers now. We're nearly at 1,000. GMS on replay. You're going to watch it GMS on replay? I love it. Just use the time codes if you're watching on the replay, people. And finally, thank you for watching. And of course, we dance it out every single time, because this has been...
Good morning, Stack.
Oh yeah, we're feeling fine.
Good morning, Stack.
It's podcast time.
All right, grab it.
Grab a tasty beverage. Let's get in the groove.
Let's do that.
Synchronised.
In 3,
Now we're
2,
on the move.
1. Slurp it, baby.
Good morning, Stack.
Oh yeah.
Oh, that is good on a beautiful Melbourne day. Stay safe, stay informed, keep stacking, and I will see you tomorrow. Let's see what happens, hey? Be well. See you later.